What's up, guys? It's Rob here, and today we need to talk about shorts and what they're doing to a couple of very popular stocks. Now, we're going to start off with CEI, then work our way into BBIG, ATER, and finish it off with SDC. So let's take a look, first of all, at the CEI chart, because this is by far, in my opinion, the most heavily manipulated stock that we've seen from shorts in the past while. And I'll explain that. So first of all, you can see that over the past 30 days, we were experiencing a monumental rise in stock price, right? We were up over 10x at one point, right? We were down at lows of 45 cents just about 30 days ago. And then we made highs of over $4.50, right? We were at $4.85 at the peaks of this stock. And we were holding fairly well at $3 for a while, right? We were holding there. And this whole stock run was basically based off of some Twitter influencers, Zach Morris mainly, pumping this thing, as well as the potential for a short squeeze and all that. But you can see that as soon as options got listed for this stock, you can actually tell when they got listed because of the implied volatility line, which is this purple line overlaid on the volume chart down here. As soon as they got listed for this stock on this day, the very next day, this stock got shot down. And that was actually on a short report released by Carousel Capital, where they just bashed this company fundamentally and shorted it very heavily. As well as, other institutions were doing the same, right? They were all shorting this thing, pushing it down in the beginning, right? Before a lot of a lot of retail investors ended up losing some faith in the company and ended up selling in massive quantities, right? Which continued to push the stock price down. Then shorts were actually able to cover a couple of their positions. Some of the shorts who had gotten in at these very high prices, probably, above $3.50 or $4. A lot of them began covering around here. And you can see that we did actually experience a bit of a rise the couple hours after that this thing had gotten shot down, likely because shorts were covering. And since then, we have been trading around in a couple of ranges, right? We've been trading around mostly in the $1.40 to $1.80 range. That was a very important range, which was established, you can see, on the first day that we dropped. You can actually, let's find a good angle for this. You can see that we dropped down initially, found some support at $1.40, then resistance at $1.80, and eventually went lower, got back into the range, subsided below it, and since have gotten back in, used $1.80 as resistance and support, and have been trading there for the past couple of days. Now, shorts are continuing to manipulate this stock. Now, if you actually look at the Ortex data, you can see that the short interest has just increased today by 9.34%, and this is because shorts were getting worried that this stock, was pumping up, right? Because it pumped all the way up. It was down at lows of 86 cents after the big fall, and it pumped all the way up to over $2, almost $2.50, and that was much disliked by a lot of the shorts, a lot of the institutions, because if you look at the options chain for this stock, you can see that there were tons of open interest call options that were getting put in the money for this stock, specifically at the $2 strike price. A ton of institutions were worried that 55,000 open interest call options were becoming in the money. And they were worried about that because it's likely that a lot of institutions were selling those call options. And that's actually why, this stock was only allowed to go above $2 right here for a very short amount of time. It was allowed to stay above that because $2 is a big pain point for institutions, anything above $2, and they might have to start covering their open interest call options because a lot of institutions were likely selling these options naked. A lot of them would get into some trouble if we got too close to the strike date and this thing was trading above $2 or, above $3 because there's 30,000 open interest call options for that, 19,000 for $4, 14,000 for $5, and 12,000 for $6. This thing really does have the potential to gamma squeeze pretty high up if it does actually manage to hold above $3 for a while, right? Because October 15th is the strike date. That's in 3 days from now. And institutions really don't want this thing to do that. So they have been shorting it. You can see we're up about 10% today on short interest on CEI because institutions are trying to keep this thing down. They really don't want this thing to go above $2. And this just speaks to the manipulation in the market. That's kind of what we're going to be talking about today with all of these stocks. All of these stocks are fairly heavily manipulated by shorts because they want to basically take money from everyone who is buying them long and just trick people into selling when the price is down. And sometimes that's the only time you can sell, right? If shorts really have a grip on these things, sometimes they just get held down indefinitely unless, you get saved by a big whale or a ton of momentum coming in. But oftentimes, shorts do take control of these stocks and just continue to push them down. And a good example of that is BBIG. You can see what's happened with BBIG over the past 30 days. Or really, let's go to the past 90 days because this is more of a long-term one, right? You can see that we were trading down at $2.12 until we rallied up all the way to $12.50. And since then, we have just been getting destroyed share price wise. And it is because of the shorts, as I'll show you guys in a second. You can see that on the Ortex data, you can see this yellow line, which is the short interest as a percentage of the free float, has just perpetually been increasing and increasing and increasing. And shorts have been doing this in an attempt to push this thing down to turn it into a big profit. You can actually see that currently BBIG is up 10% on the day, and we are breaking through a key resistance level of $5.70. Now, this stock has had a very rough ride, and we're actually following a very similar pattern to what we've seen in the past. And I don't know if this pump up is going to sustain itself. It may end up falling, but what's important to note is the pattern that we've seen in the past. So first of all, let me just run you guys through what I'm talking about here. You can see that, ever since we've made these highs of 1250, we have subsided and hit these resistance levels, right? $10 right here is actually a fairly important resistance level for the stock. And we've ended up hitting it, used it as support for a little bit before pumping up, making a lower high, and then pumping down, breaking through the support level, making new lows, right? And then we ended up hitting this $8 support level before pumping up, making a new low again, breaking through the previous support level, going down to $7 as a support level over here. Before we sustained there, didn't even have that big of a pump up on this one. We ended up just kind of crashing through, in pre-market, sure, we were up a little bit, but it's hardly even what you could call a pump up because most people trading are not awake at 4 a.m. when this thing starts. So we ended up just moving down, breaking through the support level at $7, hitting $6 as a new support level before pumping up a little bit, then breaking through that again, hitting a new support level at $5.70, and then pumping up again, hitting the $570 level after that. We've basically just been over and over, having these pumps with lower highs and lower lows as well, where we just keep getting shot down. Now, I can't guarantee that this is going to be the same situation, bouncing off of $5. We may end up rallying quite a bit. Maybe this will be the one, especially if we start getting past like $6, $6.20, $6.40, where this last run up was taking us. If we ended up breaking above that, that could be a bullish sign, right? Because we would no longer be making these lower highs that we have been. If we were able to break above this previous pump. So that would be a point to watch for. If we do continue this rally throughout the rest of the day and potentially tomorrow, it will be very interesting to see if we're able to actually break this pattern, because until we do, it seems to be that shorts just keep perpetually shorting this thing. Once again, looking at the Ortex data, this yellow line right here is the short interest as a percentage of the free float, just going up and up and up, just basically shorts manipulating this thing, pushing it down and down. And I know that a lot of people think that there are some big catalysts that are coming through for BBIG, that this thing is going to pump up on acquisitions and dividend news. And, it looks like we are seeing a big green candlestick right now. So we're going to have to see, over the next couple of days or next couple of hours, if we can break above this previous high that we've seen at $6.45, I believe. That's it right there. So we're going to have to keep an eye on BBIG. It'll be interesting to see if we can break out of this pattern. That is when I would start to get more bullish on it, right? If we're actually able to break this pattern of lower highs and lower lows, that would be very nice to see with BBIG. But until then, I am a little wary of it. And, a lot of people like to bash me in the comments for not just pumping up this stock and talking about all the great stuff as going for it. But, I like to trade off of price action. And if this stock is just dumping and dumping and dumping and continuing to follow a very somewhat predictable pattern of these lower highs and lower lows, then I don't really want to touch it, because I definitely don't want to short it. There's always the potential that it will get blasted off to the moon. And, any shorts in this thing could be hurt quite a bit. I will admit that. But, the longs, if you really believe in it and have conviction, obviously this isn't financial advice, but then, feel free to hold it, like, if you believe in it. But I tend to like shorter time frame trades, right? I don't want to just hold a stock perpetually if it is just dropping and dropping. That makes me a little antsy, right? I don't like being down big on money. I would rather wait for an indication that we are breaking out, like actually making a new high and breaking this pattern. If I saw that, that would make me more bullish and more likely to take a position. But a lot of people are already in this stock. They're going to be holding for a while, and that's their choice. That's fine. For them, if you guys are one of those people, that's good. Good for you. If you think this thing is going to pump up, definitely follow your convictions. But obviously, not financial advice right here. But on to the next stock, ATER, which is a very interesting one, and one that has definitely experienced some manipulation, as you guys know, especially looking at this 30-day chart right here. You can see that shorts hit us very hard at this $20 level. And there is a reason for it, right? You can see we bounced off of $20 twice before getting shot all the way down to under $10, right? This is a 50% loss on the stock. So you can see the ATR if you look at the past year, there's a reason that they were shot down at that point because $20 had been a long time key support level, which it acted on right here, and key resistance level, which we hit right here. So it was the perfect point for shorts to hit very hard and to kind of trick some traders into thinking that this rally that they'd been experiencing all the way from 5 up to 20 was done, right? Because if shorts hit them very hard here, push them down, then traders are going to act on that TA and realize that, there's a lot of negative momentum coming into the stock off of a key resistance level, and it's unlikely that it's just going to bounce back instantly and break through it. And as you've seen, we've tried to bounce back a couple of times. We've bounced off of around 920 and, gotten all the way up to over $18. But then got shot back down and made new lows. Now, this is worrying, right? This is another instance of shorts just tanking a stock. And you can see that on the chart that shorts initially, as this thing was rising, shorted a ton of it to stop it from getting through this $20 level. A lot of shorts were activating their positions right here. And since then, a lot of them have been covering because maybe this isn't the best stock to be shorting over the long term. If you look at the 1 year chart, we're really fairly low and at a somewhat fair valuation for it over the long term, especially considering the fact that it was up at $50 just earlier in the year. So a lot of shorts likely don't want to be shorting this thing long term. But if you look at the day, you can see that every time we are experiencing a bit of a rally, let's look over the past 5 days, right? It looked like we were going to be rallying past $8, right? We bounced off of the $8 support, started moving up, and then shorts started coming in. You can see that we're up a little bit today, up 2.57% short-wise. So, shorts, once again, are coming in and just trying to push this thing down. They're pushing us down to this $8 level. We're going to see if we can hold it, but it is not the best news for people holding this stock. And you can actually see there are a ton of open interest call options past $10, which is likely why shorts are holding us down. As I pointed out in other videos, shorts do not want this thing to get past 10. They saw this thing moving up, but they really want this October 15th strike date, which is in 3 days. They want these open interest call options to expire, and they want them to expire worthless, right? There are 15,000 $10 call options, 15,000 $12.50 call options, 21,000 $15 call options, and this just goes on and on all the way until there are 15,000 $35 call options, which, are very far out of the money. Shorts are probably not too worried about those, but they are likely pushing this thing down past $10 because they do not want it to be past 10 where all of those open interest call options start getting activated and potentially gamma squeezing some people out of it. So shorts, I think, are more so using shorting not as a tool to make a bunch of money on this, but are rather, inspiring a big push down in the price so that they can sell these options to people and collect those premiums and end up getting paid from that, right? I don't think that shorts expect this thing to dip down a ton. I think they're more so using their position just to stop people from making money on the options, to stop those options from being executed, and to just collect those premiums for the next couple of weeks and months, however long they can keep this thing going, however long there is still interest in the stock. And it's not impossible for this thing to really pump up, right? It would take a lot of momentum, though. We would need to see a lot of new capital flowing into it. And, if that's going to happen, we're going to have to get some big news. We're going to have to look maybe to the Reddit community. You can see that ATER is trending number 11 on Reddit and Wall Street Bets. However, that has been decreasing, right? It's down 6 spots on the day, down 29% mention-wise over the past 24 hours. So interest is waning in ATER a bit, right? That's a similar trend for a lot of these stocks, right? Vinco Ventures, BBIG, if you look, used to be one of the top trending stocks on Reddit. Now it's number 52. So, there is some downside with these stocks. CEI also, if we look at that, is trending number 23. It used to be one of the top stocks as well. So a lot of these stocks have lost favor on Reddit and Wall Street Bets. That's understandable. They have been decreasing in price a bit for a while, especially ATER, which has seen these big gyrations in stock price. So it's very worrying for a lot of people to see that we are starting to make or get very close to making new lows, which we were doing just a couple of days ago since the big rally. So that's something to watch out for with ATER. Obviously, the $10 strike price call options are likely being targeted for a collection of premium by those institutions. So watch out for shorts on this one, right? I wouldn't worry too much about this thing dropping a ton. I don't think that it could go that much lower. I think that there are a lot of people who believe in the company, and if you look at the valuation based off the past year, it seems like it's at a pretty fair place and a pretty key level, right? $8 is a very strong level that we've held off of in the past, right? Before we saw this massive dip below, it makes sense that after all this news and all these catalysts pumping this thing up, we could hold above $8. Makes sense to me, but we'll have to watch it very closely because we are hitting that level right now. So The next one, the final stock, SDC, this has been called the son of all short squeezes, right? They're calling GME the father, AMC the mother, and SDC the son. So this one is being very heavily marketed on Reddit and Wall Street Bets. You can see it's the number 3 talked about stock on Reddit and Wall Street Bets. It's losing its spot to Progeny, which is up 7 spots today. It used to be number 2, right behind the S&P. But it is one of the most popular on Reddit, and people are really trying to pump this thing up. And you can actually see on the chart that we have had a big pump up already, right? We were trading much lower, $4.50 just about a month ago, and then we pumped up all the way to $8.20, and since then have subsided a bit, but are making a second rally. Now we're going to see if this one can hold, because SDC is experiencing something similar to what these other stocks have experienced short-wise, right? Shorts are continuing to push it down. You can see that on our big rally, on this big rally in price, when we were up at $8 and something cents, we ended up getting a massive increase in short position following that. Okay, so shorts were basically trying to push this thing down, and they did succeed temporarily, right? And you can see once again, now that we're experiencing this rally, we aren't actually experiencing that big of an increase in short change, right? We're only up 0.39% on the day. We're going to have to see what happens with this. We have gotten pushed down a touch over the past couple of days. Off the highs, we were up almost at $7. We did break 7 at one point. Now we're down at 6. So we're going to have to see if we can hold that level. It's going to be a tough one for SDC because other than the marketing that I've seen on Reddit and Wall Street Bets, I haven't seen a ton of fundamentals for it moving forward, right? It's a good one. It's a good stock overall, right? Fundamentally, I shouldn't say we haven't seen a lot of fundamentals. I mean, I meant to say we haven't seen a ton of fundamental catalysts for a short squeeze, right? We are only at 43%. Not the highest that we've seen, not the lowest though. But shorts are, as we've seen in the past, able to really hold their ground a lot of the time. And unless we see big momentum, which is what I'm really saying we have not yet seen, right? We've only gone from $4.50 to $8. A lot of these other stocks, we've 5x, 10x. SDC has yet to really prove itself that it's able to experience a big push up in price, because the market cap on this one is actually fairly large. If you look at Ortex, it actually has incorrect data for some reason. I don't know why they have such a low market cap for it, but I believe it's around $2 or $3 billion, not the 727 million that you see here. So SDC is a larger market cap stock than a lot of the ones that we've seen. It is a decent company fundamentally, right? It has had much higher highs of around $16. It does have the potential to be moving up quite a bit, but we have not yet seen a massive rise in price, right? We've seen a somewhat significant rise in price. We've seen a doubling almost a doubling. We haven't quite gotten to $9, which is where we would need to get to officially, have doubled from these lows of 463. But we have seen a big rise in the price, and we're really just waiting for it to prove itself, to prove that it can actually blast off and move up in a big way. And that's what would really start to scare shorts, I think. 43%, it's somewhat significant. Obviously, you're going to need a lot more than just a high short interest percentage to actually get this thing to squeeze. You're really going to need to see a lot of momentum and a lot of people piling into the stock, pushing up the price. And you're going to need to see a lack of sellers also, because when people are selling the stock, that just completely defeats the purpose of trying to push it up, right? When people are coming in massive ways and just pushing us down, that's basically doing shorts work for them. So this is an interesting one. It's potentially one that you might want to just be holding a little bit of on the off chance that it does really become the son of all short squeezes, similar to GME and AMC. It has the potential to, but we have yet to see it prove itself and actually move up in a big way. So that's what I'm waiting for SDC. Other than that, guys, that's really all I have for you with these stocks. So I hope you have a great day and that you've enjoyed the video. If you did, feel free to like the video and subscribe to the channel. Other than that, have a great day. I'll see you in the next one. Bye.